Big shout out to Prime XBT for sponsoring today's video. If you don't know who Prime are a platform where you can not only trade crypto, but you can also trade FX, commodities, and stock indices. And the beauty of these guys is you can use crypto, either Bitcoin or USDT, as collateral to trade against these pairs. If you want to find out more about them, then check out the links down in the description. And if you do want to trade with them, then use our codes below to get up to a 7,000 USDT deposit bonus and 25% off trading fees. So thanks once again for sponsoring today's video. Good morning, gang. Good morning. Welcome to this week's Bitcoin update. First and foremost, as usual, remember, nothing discussed today is financial advice. I'm not a financial advisor. This is just for educational purposes only, and this is my view of the markets. We're still in the month of January. Bitcoin has had a decent pump. In fact, one of the biggest weeks we've seen in a long time. And so far we're sitting at 25% up since the yearly open, which is always good. Does that mean it's time to get uber bullish and it's time for the moon? No. Does that mean it's time to get uber bearish and we're looking for new lows? No. It just means that we're still in the same range. Right, so let's take a look. Obviously, monthly, we're still technically down. We've not confirmed this as a higher high yet, and then looking for a higher low and a higher high. Weekly, exactly the same scenario as the monthly. Daily, obviously, we are still maintaining this local uptrend, as we can see here. You know, we've got as low, high, high, low, high, high. So are we looking for a higher low and then a higher high again to complete effectively a 5-wave impulse? Possibly. Again, this 5-wave impulse doesn't necessarily mean that bull market's back. It actually could be part of a larger corrective pattern, but you know, I'm quite happy to sit on the fence. If the low is in, then well, it's quite simple, isn't it? If the low is in, then you don't want to take out that level there. If the low's not in, then it'll take out that level there. It literally is as simple as that. So whatever your belief is, whether you're team bull, team bear, or team I don't give a crap, then that's the level in the sand, isn't it? That's the line in the sand. Right, so what were we talking about last week? Well, last week, we're up towards the range highs. In fact, when I recorded the video, it had been Thursday, so we would have been here. In fact, it were in the morning, so it would have been a bit lower. And what was I looking for at the time? Well, quite simply, we were looking for, if we draw it on our volume profile of the old larger range, we'll throw it on a fib retracement, not from that high, from this high, and we'll change this to the 786, where we're looking for this golden pocket lining up with this point of control. So that was an area of interest for shorts. We did get a small reaction when it happened. Let's zoom into the 4 hour. We did get a small reaction when it happened, initial pullback, but then since then, we just blasted straight through it. So acceptable scalp shorts, but taking into consideration the fact that we are still printing high highs and higher lows, obviously you counter trend trading. Now, a counter trend trade is absolutely fine to take, but you need to know when to get out and not overstay your welcome. So take profit one, very quick, stops to break even. If then you are stopped out, it's still a winning trade, even though the trade idea itself was wrong in the end. It's absolutely fine. And it's fine to be wrong in the market because no trader has a 100% win rate, as we've discussed many, many times. Anyone that tells you they do, they're talking out of their backside. So the next level we were going to look at was the 786, which luckily offered no reaction at all. We just ploughed straight through it. And then, as I was saying last week, if I remember rightly, I'll link last week's video in the description. Or put it up on screen at the end of the video, but we're ultimately looking for the value area high, and that's where we came into. So effectively, we blasted straight through value into the value area high. Now, the beauty of this value area high is it also lined up nicely with a golden pocket. So we've got confluence there. So good region for a pullback. Is it a region for a full-on reversal? It could be. Or is it just a region for a pullback before a continuation higher? Again, quite happy, either option. So, what can we be looking at next? Well, first and foremost, I want to address something that's quite entertaining at the moment because it seems to be going insane on Twitter. Is let's zoom into this current price action and let's do this, and let's try to draw it out. One of the idiots drew it. There we go. Right, so starting here, I'm ploughing straight through all these wicks like so, and then we'll start it down. How's he drawing it down here? He's drawing it somewhere around here, and we're just driving up like this, just random lines, you know, because this is how it works. And everyone's screaming bull flag. Well, I say everyone's screaming, a very small selection of people that haven't got a clue how to trade. And my issue with these is patterns like this just wreck people. They wreck people because there's no context. They don't understand what's above them. They don't understand what's below them. They don't understand support and resistance. All they understand is making TA look as simple as possible, so therefore you click on all their links, buy their shitcoins, whatever they're shilling you, and they haven't got a clue how to trade because their income doesn't come from trading, right? And I'm just going to point these guys out because everyone knows who we're speaking about here. We're talking about this Muppet. Continuing, obviously people are calling him out. It's absolutely fine. And then, you know, he's going on Google and searching up what they look like. And then the other Muppet's getting involved, you know, jokes on you, dude, use Google. And this just goes to show, right? So influencers like this, or dinfluencers I like to call them, they go on Google, they type in chart patterns, and that's it. And then that's it. That's the level of their TA. And what they're actually missing here is everything else around them. So what have we got going on around this? So, well, let's first and foremost, let's drag on the old range that we were in. Here's the old range. Let's go for the range fib. Now, again, this is the fib tool that we use in the group. It's something I created for the group because it helps spot deviations of ranges, and it also gives us a nice upper boundary of the range, lower boundary of the range, and the Q of the range. Okay, and then the blue line and the purple line on the other side are the standard deviations of said range, which we can see they caught the lows perfectly, which is why we had nice long opportunities from the absolute lows. Okay, now again, I'm not saying absolute lows in the lows in, because it could be, it might not be, who knows. We just trade this range until it breaks. Once you get outside of these standard deviations, then you can start looking at different prices on the upside or the downside. But so we're into the range EQ. Okay, so that's on the macro picture. Now when we zoom in to the local picture, and this is where they're drawing the squiggly lines, well, quite simply, again, same idea. Range high, range low, and we're in a sideways range. And it's as simple as that. It's as simple as that. So rather than trying to draw your little squiggly lines doing this and looking at a chart pattern, and then every time price wicks through your top level, you're longing it, which we know this is happening because we can see that on the order flow. Every time price breaks the top, we've got fresh longs coming in, people getting over aggressive, thinking it's just going to go up only, and what happens? Price reverses on them because it's a great liquidity grab. So we've actually, within this little small range, we've had swing fairly pattern after swing fairly pattern after swing fairly pattern. So we had this high point, swing fairly pattern, took the liquidity and the stops from there. Swing fairly pattern of this high, and then yesterday again swing fairly pattern of this high. All valid short setups. But is that a valid short setup to bring it to brand new lows? No, it's just playing this local range. And what we do is we play this local range until it breaks. Okay? Like I was saying in the in our Discord yesterday, I give daily plans every single day, and I tell people my trading plans along with chart images, and this is just a snippet from yesterday's plan. So same as yesterday, referring to Tuesday, no change in market structure yet, and low time frame remains intact. Okay, so by the low time frame range, I'm talking about this range right here, right? As long as the monthly level still holds as support, no reason to get bearish yet. The flat idea is still in play, and that's a higher play Elliott wave count that we've got going on. And obviously I'm just highlighting the fact that we've got a news event at 1:30. Now obviously this added to the fun, because the news event comes in and we get this reaction. Okay, so that's all we're looking at. So rather than trying to draw all these chart patterns on here and trying to trade the breakout of these, we can see every single time breakout traders get wrecked because we're just in a sideways range. We've just had a huge run up. You know, this is one of the most significant weekly candles in Bitcoin's history. 31% run up. Now, obviously, compared that to an altcoin, and some altcoins are up 200%. Absolutely fine. But in Bitcoin terms, this is a significant run. So if you think it's just going to continue going straight up in a straight line, then you're a bit of a fool. You know, price needs to chill out. Price needs to take a break. We'll get a range. If you are bullish, then you're hoping that eventually, excuse me, you're hoping that eventually this range will break to the upside. If it breaks to the downside, then are we looking for more support to continue up, or let it roll over? If it breaks to the upside, where's the next areas that we're interested in? Okay, so rather than trying to get involved in a silly debate about bull flags or bear flags and what they're supposed to look like, just trade the sideways range. You've had acceptable shorts, you've had acceptable longs. Okay? Don't get tied up in, you know, influencers posting daft patterns. Right, so let's zoom out and let's look at what we can be looking at next. There we go. Right, so now we're back into this old value area. So now it's time to put the volume profile across the whole range. Now keep in mind, we still have the mini range down here, which is the deviation range. So we'll still be aware of that. So let's throw on a volume profile down here as well, because this is in itself its own little range. And then what we'll do is we'll throw on the overall macro range onto here. There we go. Right, and this is what we're looking at right now. So if price is to break up from here, and we do manage to flip this EQ into support, and we get this kind of move, then first and foremost, as usual, I'm going to be looking for a zone around this value area high. Okay? Which would be nice, because the value area high, take these stops, change your market structure, and then you've got a valid short setup. Okay? Again, it's not saying a valid short setup that's going to bring you down to new lows, but it's a valid short setup. You'll be looking back down at this EQ. Loses the EQ, you'll be looking back down here between this point of control and this value area low. Lose that, then you're looking back into this little mini range again here. Okay? If we get no reaction here, take out these highs and continue up, then ultimately we're just looking back up towards the high of the range. Now if we get to the high of the range, if there is a short setup to be had, ideally I'd want to see these highs run. So you'd be looking at something like that. Change your market structure, and there you go. Grabs the stops from up here, grabs the liquidity, and then changes. And then we're just still playing this overall high time frame range. Break above that with no reaction. Continue up, then I'm looking at these standard deviations. Okay? It's as simple as that, it's just level to level. If it does continue to moon up, and let's say these levels don't offer any form of resistance, let's just remove that. Zoom out. I'll go on to the daily here. And like we've been saying for a very, very, very long time, if price continues up, then we're just going to be back in to this overall range. Let's just draw this on here. Back into this overall range. Okay? So then what you've got to ask yourself at this point is, do we get acceptance back into this range and flip it, and then we're back into this overall range? And if we don't get acceptance back into this range, then do we have another acceptable short? Okay? It's just level to level at the moment. Get back inside this range, we've got higher levels to talk about. Don't get back inside that range, we're still continuing down here. Okay? So for me right now, I'm not, as usual, I'm quite happy to sit on the fence because I'm a level to level trader, I'm a range trader. Yes, I do trade quite big swing positions. You know, I am still holding a short from here. I have taken profits all the way down. There's still some in the trade. But if we start to see price reclaiming back into this old range, then I'll start to close out of this. Absolutely fine. I am still in a long from lower. So we're hedged. Okay, and then I'm still quite happy to trade the low time frame ranges as they present themselves. Right, so again, I don't care whether we go up or we go down, and that's the beauty of being a level to level trader. It makes no difference which direction price goes, I will still make money regardless, and that's how I train the guys. And obviously if you guys want to learn along with us and understand how to trade level to level, then come check out our website, spitfiretraders.com, links down in the description. Come join our free Discord. You'll pick up a lot of alpha in our free Discord. Several different types of trading styles in there. And as I said, there's well over 1,000 members. If you do want to learn along with us, then come check out our members only area, which for the grand old price of $59.95, that's Great British pounds, then you get access to all of our learning content, all our educational content, which there's over 80 hours now of content on there. And a big set of the modules, funnily enough, is patterns. And I teach you how to trade these patterns properly, not like what the influencers teach you to do, you know, not like you find on Babypips or Investopedia.com. I teach you how to trade them properly, and a lot of the time it involves how to spot the counter trend opportunities. Okay, look for the trap traders and how to spot a swing failure pattern like we've seen in the past few days, and counter trade, because it's the easiest trade out of everything. Okay. Also, if you do join us, then our latest chat and chill episode, which was from, so obviously this Tuesday just passed, I actually give you my thoughts on whether I actually do think, from an Elliott wave point of view, whether the low is in or we've got lower to go. So these are my exact targets, and I give you my exact reasoning how I'm trading this from a swing trade point perspective, if you want to know if the low is in or not. So yeah, if you want to come check that out, then again, head to spitfiretraders.com. Right, back to it. Now, what happens if we start breaking down from here? That's the next question. Okay, so let's clear up some of this. I'll get rid of that one. Let's zoom back into the 4 hour. Right, so let's throw on our range again. There we go. Now, what happens if we start breaking down? Well, if we start breaking down and we lose this key level, which is the level I referred to in yesterday's update, and I've still referred to it again in today's update, lose this level, then we can start looking for lower prices. So, what lower prices can we be looking for? Well, if we take a fib from the start of this impulse up, which is here, up to the high, and we'll change it on to fib retracement, we can see we've got right now bouncing off the 236. Now, if you guys know anything about me, then you know I'm not a great fan of the 236 unless we're looking on a macro picture. We've got the 0.5 hovering around this point of control. We've got the golden pocket, which lines up nicely with this previous range high that we've had for this mini range. Okay, so that's something to be aware of. So if this is resistance flipped into support, then could we be looking for a bounce in this region? Possibly. If that offers no support, then we'll be coming back down, and I'll be looking around this macro range lows. If this region offers no support, then we're just trading this old range. Do we get acceptance back into value? Yes. Well, do we hit the EQ? Point of control value area low, and this is just a tighter range. Obviously, we're looking at this on a 4-hourly chart. If you zoom into the 15-minute chart, this is going to look a lot bigger. Okay, so we're just trading level to level, and as I've said before, if you are bullish and you want up only environment, then it's very, very simple. You don't want to lose that level. Okay, so that's it. So that's the downside, that's the upside. We're still in a level to level environment until we break this range and get acceptance back into this larger range. I'm not going to start looking uber bullish yet. Okay, yes, I do hold longs. Yes, I do hold swing shorts. Level to level. Right, guys, that'll do. How long we've been going? Well, quite a while now. If you've liked today's content, don't forget to hit that like button. If you're not subscribed, then do it. And until next time, guys, as you were, bye bye.